Let us know more about the NBFCs, that is non-banking financial companies. An NBFC is a financial institution that does not have a full banking license, not supervised by a national or an international banking regulatory agency. It is a financial institution which is not having a full banking license, that is to work like a bank. Neither it is supervised by RBI or any sort of regulatory body, either national or at international level. So, it refers to a company that has been registered under the Companies Act 1956, earlier 1956. From now onwards, it is 2013. NBFCs are engaged in the business of loans and advances. So they provide us loans and advances. They help in the acquisition of shares, stock, bonds, debentures, and other securities. These are the entities which provide bank-like financial services but do not hold a banking license. These are regulated by Ministry of Corporate Affairs and RBI in India. It has played a pivotal role in Indian financial system and have taken a great leap in the last 10 years. And they have penetrated in the remote areas of our country as NBFCs are formed to help the smaller section of our society where the banking facilities have not reached yet. So they offer credit facilities to those millions of individuals and small firms which are generally ignored by the banks. Let us look at the role of NBFCs. So NBFCs have helped in strengthening an economy because they have helped the smaller sections of our economy which remain unbanked since years. NBFCs help in providing multiple alternatives to transform an economy's savings into capital investment. Like they help to the MSME sector, to the small farmers, artisans, to the self-help groups. So they help in building new entrepreneurs as well as they provide multiple alternatives to them to transfer their savings. For example, the SHGs. So their savings is transformed into capital investment, all thanks to NBFCs. NBFCs introduces competition in the provision of financial services. The financial services are not limited to providing consultancy or insurance facility or normal day-to-day banking facilities which our merchant banking provides, but it helps in providing multiple alternatives in this sector too by helping entrepreneurs to build their business and to embark on new journey, thus strengthening our economy. It offers a set of financial services as a package deal as well. It may specialize in one particular sector and develop an informational advantage. So the NBFCs might specialize in a single sector, for example, agriculture. They may specialize in agriculture and provide complete information about agriculture, its future, technological aid, everything to the smaller section of a society, that is farmers. So NBFCs are specialized in individual sectors or they may not specialize and it is up to them. An NBFC may provide all-rounder services or complete package of services or it may specialize in a single field. It depends on different types of NBFCs, like we have loan NBFCs, asset management NBFCs, different NBFCs. It supplements banks by providing the infrastructure to allocate surplus resources to individuals and companies with deficits. So the infrastructure is provided to the banks by NBFCs. How? They help in allocating surplus resources to individuals, companies with deficits. So NBFCs help banks. They take money from the banks and they provide it to the smaller section of our society or the individuals and companies which are running with deficits. So the areas where banks can't have their reach, NBFCs has become a medium of exchanging information and banking services to those sections. So it is a infrastructural entity which aids to the individuals and companies with deficits. So the surplus available with the bank is provided to them. Thereby, it enhances competition as well in the financial services industry by unbundling, targeting, and specializing as NBFCs work in the niche areas. So they unbundle their services, like they target, they focus to the smaller aspect of services, a limited section of the society, and providing specialized services to those particular section. Now, what a SHG, that is self-help group, is needing in the form of financial services is provided by NBFC and not a bank. Bank will provide only the facility of accepting and lending loans, but NBFCs plays a pivotal role in creating new entrepreneurs, providing multiple ways to them to start their business, thereby aiding them to stand on their feet. So it enhances competition within the financial services industry as well. Further, NBFCs support investments in property and prepare feasibility market or industry studies for companies. It has expanded greatly in the last several years as venture capitalist companies as well and retail and industrial companies as well. As I have said, they specialize in different sectors. So different NBFCs have specialized in different sectors and come up as venture capitalist companies, retail and industrial companies as well. NBFCs provide wealth management such as managing portfolios of stocks and shares, discounting services, discounting of instruments, and advise on merger and acquisition activities. These are also the services provided by an NBFC. It offers most sorts of banking services such as loans and credit facilities, private education funding, retirement planning, trading in money markets, underwriting stocks and shares, term finance certificates, and other obligations. These are the few services which are provided by the NBFCs. Moving ahead, NBFCs have taken a lead over banks in providing innovative financial services to MSMEs as they offer the most suitable package to them based on their business requirements. This is discussed in the earlier slide as they specialize in different sectors, so they focus on the niche areas to the smaller section. So MSMEs are greatly facilitated by NBFCs. They have emerged as an employment generator by lending their support to small sectors businesses and companies. Further, we'll have classification of NBFCs as financial service providers, specialized sectorial financiers, market makers, contractual saving institutions or institutional investors, and risk pooling institutions. Let us look at each one by one. First is financial service providers. So NBFCs work as financial service providers. So they work both like securities and mortgage brokers. They act as management consultants and financial advisors as well. But they work for fee. Whatever financial services they are providing is based on a fee, and the services include improving informational efficiency for the investors. So whatever information an investor is needing is improved by them, is provided by them in an efficient manner. In case of brokers, they offer transaction service by which an investor can liquidate existing assets. For example, they may act as a discounting and factoring agent for those smaller section of society as well. Now coming to the specialized sectorial financiers, they provide a limited range of financial services to a targeted sector because they are specialized. So for example, real estate financiers channel capital to prospective homeowners. Obviously, they can't finance to the other section of a society. They will facilitate their specialization to the estate sector. We'll have leasing companies who provide financing for equipment and assets, obviously. Payday lending companies that provide short term loans to individuals that are underbanked or have limited resources. Looking at market makers, how NBFCs work as market maker. So market makers are those broker dealer institutions that quote a buy and sell price and facilitate transactions for financial assets. Such assets include equities, government and corporate debt, derivatives, and foreign currencies. A major contribution of the market makers is improving the liquidity of financial assets in the market. So if an asset is having the value of rupees 10 in the market, these market makers act like a maker of a market and they enhance the value of that particular asset from rupee 10 to might be 12 or 15. So they are termed as market makers and they improve the liquidity of an existing asset. Contractual saving institutions are also known as institutional investors. Why institutional investors? Because these are the individuals who invest in collective investment vehicles as a trustee rather than acting as a principal agent, but they act as a trustee. For example, our insurance, how our insurance company works, or you can say pension funds and mutual funds. In mutual funds, we have a trust on them, so we invest in them. So we provide them with the money we invest in them. We invest in the pension funds and mutual funds. Further, the money is rolled out as per their specifications, and we wait for our returns. So what we provided to them as mutual fund is used by them as capital, equity, debt, in form of which instrument we don't know. So they again roll it out and they earn money and then they provide return to us. So collective investment vehicles pooled resources from individuals. We provided them with the money and firms into various financial instruments like equity, debt, and derivatives. The individual holds equity in the CIV itself rather than what CIV invest in specifically. So here, whatever I have invested, I hold that particular equity, debt, or derivative. It is held by me itself. It is not like I have invested in the firm and the firm is rolling out my money and I don't know about it. It is not like that. So I have invested in it, and then whatever I have invested in it, I hold it. I hold it as equity if I have invested in it as equity. I hold it as debt if I have invested in it as debt. The two most popular examples of contractual savings investment are pension funds and mutual funds. Risk pooling institutions. So NBFCs also work as risk pooling institutions in the form of insurance companies. So insurance companies covers our risk against uncertainties in return as per the premium provided or paid by the insured. So insurance companies underwrite economic risk associated with illness, health, damage, and other risk of loss. Insurance companies do not have banking licenses in most countries as they are regulated by the specialized authority. Like in India, we have Insurance Regulatory Development Authority of India in the form of regulation of specific to the insurance business and may well be covered by the same financial regulator that also covers banks. It is of different countries. So they have also been working uh, as a risk pooling institution where insurance companies and banks have merged. Both of them have merged, thus creating insurance companies that do not have banking licenses. Banks and insurance companies come together and they work as risk pooling institutions without banking license. We'll have types of NBFCs companies. As I've said, they have specialized in different sectors. First is asset finance company. The example given to you is Birla Sun Life Asset Management Company. Investment company is Cholamandalam Investment and Finance Company Limited. Next is microfinance company, that is Annapurna Microfinance Private Limited. Infrastructure finance company is NIIF Infrastructure Finance Limited. Loan company is HDB Financial Services. Mortgage guarantee company is the most famous Muthoot Gold Finance Limited. Core investment company is India Infoline Finance Limited. Housing finance company is GIC, that is General Insurance Corporation of India Limited. Here are the two questions for you all. Do comment in the comment section the correct answer. So first is NBFCs are registered under Dash Act, and second is name any three types of NBFCs in India. Hopefully you enjoyed the learning of working of NBFCs. Stay tuned for more such videos.